Thanks, Chloe. Wow, what an intro, hey? I would love to have a two-way conversation today. I don't want to bore you with slides. I've sat in these seats and I've listened to presentations over the years, and I think it's probably better if we sort of open up and start sharing, if you're comfortable to do that. Very willing to have Chatham House rules in here, and running a listed company, we have to be careful what we say, but anything that's on your mind, if you think it's a silly question, whatever you're thinking, just please feel free to volunteer it. I think I'd sort of describe my time. Look, I went to UWA, had a great experience, didn't really know what I wanted to do, but knew that I probably needed to travel the world a bit and learn a bit about business. So I took off and went overseas and spent about 5 or 6 years in London and about the same amount of time in Singapore, predominantly investment banking. I always enjoyed trading shares when I was at uni. Loved sort of learning about companies, investing in businesses. Thought that meant I wanted to go and be a trader on a trading floor in one of the big investment banks. And the first time I tried that, I just went, this is just not what I want to do whatsoever. Like, it was just a crazy alpha, chaotic environment that didn't really suit my style. I was more a sort of a planner and a plotter. And, it was really interesting, sort of like learning a lot about valuation models and businesses. That was great, but I was more suited to sort of running operations and teams. So my experience has been more about building great teams and investing in people and businesses and sort of taking that journey. I did do my MBA through UWA in Singapore. There's a couple of my classmates there in sort of the mid-2000s. That was a great experience with Charlie was my lecturer who was flying up to deliver some of the lectures. So it was nice to see him earlier. But I've been involved in startups. I've been involved in listed, unlisted investments, and running businesses, and most recently running Cashies, which is a business that was founded in WA, and it's been through a really interesting sort of evolution. My involvement started sort of when I came back home. With a banking background, it's an unusual gig because Cashies is really known as a secondhand sort of network of stores. But there's 700 stores globally. We've built a big personal finance business. The secondhand inventory is all luxury now, the handbags and watches and that sort of luxury that people are after. Big lending business, so built credit models and leveraged on my background. But I guess the point here is that it's a different level of experience when you're dealing with, as you will be over time as your businesses grow, different stakeholders. You've got your investors, you've got your board, you've got your colleagues, your employees, you've got government regulators, different stakeholders. You're getting tugged in every which direction. So it's been a good experience in that respect. And big numbers, it's sort of like this, as the businesses grow, they get bigger. You learn to handle scale, I guess. I thought when talking to Chloe about what I thought was the most important aspects of starting a business and running a business, I think I learned over time. I've made many mistakes where I sort of fell in love with an idea, or really thought that a good idea would make a good business. And the reality of that can be quite heart-wrenching and shocking and, upsetting and depressing when it goes wrong, because you can really feel that, you've got this right and you can keep pushing hard. And, it's hard to sort of go, look, I need to either pivot or exit or, adjust. And over time, as you look at businesses, you can kind of start to see similar themes. What makes a business great, and why a business might struggle and why it needs to change. I kind of gave it some thought about some key areas that I kind of think of when I'm looking at particularly an investment and a startup. And there's some simple sort of commonalities, I guess, with how I think and how I'd recommend you to start thinking about your business, whether you're starting up, whether you're sort of in growth, or if you're in that mature sort of phase. But there's a great quote from Keynes that was saying, like, the markets can stay irrational for longer than you can stay solvent. And I love that quote, having lived through the dot-com 2000 and then the GFC in 2008. Things can kind of appear crazy and disjointed, and that can carry on. You could even argue that now with the AI hype, that valuations are so stretched, but you get later into the piece and you don't want to miss out, and it can perpetuate for a lot longer than you think it's going to happen. So I think when you're looking at the landscape, your business, how things are starting to play out, I do tend to go back to the 3 key financial statements and really keeping an eye on the numbers. I just think that's sort of how I was programmed, and I like to know profit and loss, cash flow, interacting, what's happening with the business, and then the balance sheet. How things are changing through the business, how quickly you're turning your revenue into cash flow. Some of the basic accounting principles. I remember being here doing the T ledger accounting. It's 30 years ago now, so it's probably changed a lot with Xero, but actually booking entries into ledgers, and that wasn't for me. It was more understanding what the story is telling you in front based on the financial statements of the business. But sustainable business is a different definition too. I kind of think about sustainable in terms of profit-led, capitalist return on capital, the financial metrics. Colleagues of mine, friends of mine have got different definitions of sustainable too. It might be an environmental mission. It might be a social mission. There are many different causes. Fundamentally, I believe if your business is profitable, it can continue growing, which is a good thing. And I went out to the Good Sammy's site last week. My friend runs the Good Sammy's operations, about 30 stores selling goods that are donated, if you're familiar with it. Massive warehouse out in Canning Vale. He's very profit-led because every dollar he makes, he can reinvest in hiring someone with a disability. So I thought that's a great cause. It's a not-for-profit, but it needs to generate profit to achieve its purpose. So, that's sort of how I think about it. So these are really key things I think that you need to sort of think about when you're moving forward. It's not just revenue and cost, but positive unit economics. So there's a big move to sort of break your businesses down into simple to understand units, economic units. It might be a sale of a widget, it might be a sale of a service. What revenue are you generating and what's it costing you to deliver that service? I think you need large enough markets to make your business viable. It might mean a smaller market, that you've got something that's really valuable to that market and you can take a great market share in that market, or a much bigger market. I love the markets, the SaaS software providers just have massive global markets and low incremental costs for selling another unit of whatever they're providing. They're great businesses for scaling up. Not all businesses are like that, depending on what industry you're in. You just need to make sure that you've got, I guess, a big enough market to sustain what you're forecasting or what you're hoping to achieve. Capital is a massive consideration too. How you're going to fund your business, how you're going to grow it, how much additional capital do you need once you've got your seed or your early stage capital to keep growing and meeting your objectives. Wherever you can have recurring revenue, you're not out making another sale. It's really, I think you're selling a can of Coke. Every time you're selling that can of Coke, you kind of need to find the customer to sell the can of Coke. You see a lot of businesses moving to subscription models now, where I guess the gyms were the first to do it, where they put you on a subscription plan and hope that you kind of almost forget that you've got that payment going out. It just keeps flowing to the business. The ones that like Spotify and those models are great. You see value in that. You're happy to keep paying the monthly fee. That commitment of that revenue coming into your business allows you to, it opens up all sorts of opportunities, whether it's funding or, raising additional capital. A moat. So what are you doing that's unique? What IP do you have that's hard to replicate? Can you protect that IP? The moat term, I think it might have even been coined by Buffett, but it was about that sort of perimeter around a castle. It's like a really defensive position to be in, where it's very hard to come in and disrupt your business. And I think Bezos said it best, is your margin is my opportunity, when he entered into the Amazon retail space. I remember first going onto the website, I think it was late 90s, and they were selling books. And that was great, but look where it's gone to now. Anywhere he's seen an opportunity to go after a margin, he's gone in. And as you become more successful, you get noticed, and you'll have competition. So you're always trying to sort of think ahead. How do you protect your position? How do you keep diversifying? Or how do you remain the expert in your craft? Sorry, please shout out if you've got any questions or you want to have a chat about anything. But I kind of went through and picked a couple of business models that I thought were great based on those 6 key things. Microsoft, I think, is an incredible business. Again, it's that SaaS recurring revenue sort of model. But for me, growing up, I had to know how to use Excel at work, access databases, all the Microsoft suite. Everybody ran Microsoft, so we had to learn how to use it. And then it became very embedded in corporate networks. It's very hard, for us to switch out of Microsoft. At work, we've got about 2,000 people using Microsoft. We're trying to push Copilot The younger people are saying Copilot's crap. We don't want to use it. And I'm like, oh God, but we're packaging with Microsoft. If we get some additional software, it's going to be additional expense. It's very sticky. It's very hard to unwind it. We might just be seeing the start of that happening with, Claude and Anthropic and AI. It's pretty exciting watching that unfold, but has made a great business over time. And I think taking it off the CD-ROMs that you used to have to install the software on your computer and making it sort of cloud-based and their Azure cloud offering, very diversified, a great business. And Macca's, you sort of think about Macca's for the hamburgers, but their business model was really about controlling the real estate and franchising. It was a different business model again, but it gave them a lot of power with their business model. Visa, MasterCard, the surcharges clipping big volumes. What a brilliant business that is. I think my generation certainly would have a Visa or MasterCard. Now it's proliferated with non-bank lenders and all sorts of digital options. Is great to see, but Visa and MasterCard still control the rails, control the network of payment, and put a surcharge on everything moving through, which is a terrific business for them. Amazon we spoke about, and CommBank. I mean, I think CommBank's a really great model where they give you less for a deposit than they charge a borrower to borrow money. It's kind of simple, but they've done that in a way where they've just built great tech around that offer and scaled up, and then sort of packaged in a good social branding as well. I think if you look at CommBank, they present really well, and you see other people sort of get criticised for the fees they're charging, but the banks rarely really get picked up on that, and they've got great pricing power as a result. But I think that defensive IP, the moat around your business, the margins that you're charging are all key things to really start thinking about. I went through some of these are US based. I picked a few examples. I think when you're sitting here thinking, oh, look, I've got this great idea and it's going to go nuts. Plenty of, you'd know the stats around the successful businesses and how many small businesses fail. And I think the more you can learn about why that happened, the more, interesting it is, the better chance you've got of succeeding yourself. Some of these are a little bit historic, but I really remember in the dot-com boom where we were told that the whole business model had changed, that profit didn't matter. It was about growing revenue. All these concepts sounded really new and compelling, and then proved to be not the case. And I think some of these examples here are just sort of simple illustrations of where good ideas can bring big money and then go horribly wrong. And Pets.com, that was a case of thinking there's a massive market for pet food. If we sell it online and we can distribute it online, we'll dominate and we'll win. We'll raise $300 million and we'll broke within 268 days because the cost of, shipping the big bags of pet food was so high that they were running negative unit economics. Every sale they made, they were losing money, and there was no plan to rectify that. So that one went down, $300 million gone, and the faster it grew, the more it lost because it wasn't a scale game. It was a negative unit economics issue. Every delivery that went out was costing $20. The more they sold, the more they lost. So this happens, it's crazy. The sock puppet really became a big thing. And they're like, oh, but we've got a sock puppet mascot. It's like a cultural identity thing. The business has changed. This is a different business model you don't understand. And then bang, it's broke. So you got to be careful with what you sort of forecast and believe. MoviePass, right? Another big one. These are names I appreciate you might not be familiar with, but at the time they were really compelling, big business stories. You pay $9.95 a month to go to as many movies as you want, but they're paying the cinemas $12. And I guess they're sort of thinking if they can build enough scale and get enough subscribers, they can start to renegotiate pricing. But they didn't even get there. They shut down and went bankrupt. And again, another 3 million subscribers, you could go, wow, that's a pretty successful rollout, right? I got 3 million subscribers. And it was a bit of vanity with that sort of headline number. When you looked under the hood, again, they were losing money, so they didn't last. Webvan, I sort of had some familiar experience with this in Australia where a business was started called Aussie Farmers Direct. It was a premise of selling Australian fresh produce to the door. So you got to know your customers. We're running a couple of vans. All Aussie produce was a lot more expensive to source and supply than the supermarkets. I thought maybe we could position for a premium this sort of delivery service. In this case, they really spent big on infrastructure before they'd proven demand. And again, you look at these sales and the expenses, I mean, they're just so lopsided. Even though this idea I thought was great, compelling, home delivery of groceries at the time, early 2000s, unheard of. It couldn't survive the introduction period that it went through. Sorry.
Yeah, that it's almost like a terrible business idea. Surely there's like, it can't just be so black and white. Like, I don't think anybody in this room is silly enough to be like, oh, we're going to make a sustainable business on charging you $10 and then we're going to pay for all your movie tickets. Like,
yeah.
Was there a catch for these?
Well, I think when you raise $300 million or you get 3 million subscribers, like it's resonating and there's money coming in and investors are being convinced to invest and partake in it. So at the time, there was such a boom around internet provided services that I think the fundamentals kind of went out of the window. And so this has happened. Like, I kind of think these examples are interesting because living through it, I was like, wow, like at the time it didn't seem crazy. But when you look back on it, I think if you haven't got a plan to scale and bring your unit costs down, like a really concrete plan, then getting bigger isn't the solution. And I think they thought if they got bigger, they'd kind of worry about that later. No, not at the time. Well, the money went in, so I think they believed that this time it was different. Or if they built the scale, then the cost savings would come down and the scale would generate positive profit margins, I guess. As we stand here today, you could argue SpaceX, it's trading on 100 times revenue, sorry. No, it's losing money. Just pulled off the biggest IPO in the history of IPOs. Yeah, correct. Yeah, I mean, the only part of the business making money is Starlink. So you could argue the rest of the business isn't worth anything, or how would you value the rest of the business because it's losing so much money? So it's interesting. I guess like my key takeaway is that I guess just be aware to it. You know, if you can solve for these issues, you can do terrific things. But if you're seeing these indicators, perhaps adapt and change or scale back or renegotiate different suppliers, bring fixed costs down. There's all these things you can kind of turn your mind to. But yeah, this happens. So these are
actually just acquire that and then to manage it, it's a whole other set of costs. But the lifetime value of that customer's for a brand. And it's like, well, you're not, you know, you might have raised all this money and they're living off that raise. So then it's like, well, how do we switch this into a business model that's actually going to work for them? And if you can think about that from the front end, so like, what are my actual expenses? So I might be making my pre-workout jelly at the moment in my house and it might be costing me, you know, $1 per unit. But as I scale up, they need production facilities and licensing costs and marketing costs and stuff. What actually are my expenses and what are all the things that make up those expenses, and therefore then what do I need to price my product at? And that's sometimes I think a lot of the time we'll go, especially in these early days, and like, okay, the market's going to pay $5 for my thing, but actually when you're looking at scaling, it's going to cost you like $7 per unit. So it's really interesting to pull this apart now and go, okay, well, what is a sustainable business model? What do I need to be looking at in terms of revenue and cost per unit to actually make this into something that is going to be viable in the future?
Yeah, and understanding your cost base, but understanding the CAC, the customer acquisition cost, and the lifetime value of your customer is really important. And in startup phase, you're forecasting because you might not have the history, you might not know. But to Chloe's point, you know, if you're on Google paying $100 to win that customer, and they're costing you, you know, 120 to sort of onboard and service, then there might be a problem, or there might not. If you get more customers, the CAC might come down, your brand might become better recognized, you know. Even looking at Uber Eats the other day, the $10 referral for you know, if you can refer someone, you get $10 off, they get $10 off. I'm like, $20 for a CAC, that's crazy. In the open market now, they're probably paying 5x that to try and win that customer on Google. So there are creative ways you can lower that CAC too. Yeah, spot on. I think it comes back to being across your numbers and your financials. So the three financial statements, your profit, loss, your cash flow, and your balance sheet. Really keep a close eye on that. These might be cases where that got away from them. They weren't looking at it, or they hadn't recognized the problem early enough and they hadn't adjusted for it, and the money runs out and then you're gone. So really being across those numbers and keeping a close eye on that, I think, is key. No matter how good your idea and how much volume you're doing, you could be doing a lot of volume, but you're not making any money on it. You'll only know that by really keeping a close eye on your financials, I think.
Said they didn't look at any fundamentals.
Yeah,
We can also say same thing is happening in AI right now.
yeah.
So how do we not end up as a stat 10 years down the line with this kind of setting?
Yeah, I think about, I guess that dot-com boom kind of blew up, and then from the ashes, great businesses rose. I remember looking at Google when it floated. I thought, I'm not touching any internet crap. I've been there, I've done it. I'm not participating in the IPO, and then Google just went nuts because it was that model that really was sustainable. So there are probably 2 or 3 unicorns that will start this year out of Australia, billion-dollar businesses. It's sort of making sure that you're one of them. And it's very possible, but it's just sticking to the basics, I guess. There's no real, nothing really clever. It's just being across your numbers. It's making sure you keep a tight focus on your budgets, keep challenging your forecasting, testing small and piloting. That's something that we're doing a lot at work. We'll sort of have an idea or a hypothesis. We'll just MVP a product and try and get something out just to test. Often thinking you kind of know what the customers want without talking to the customers, doing the focus groups. You can end up going down a path that's going to lead you down to a dead end. So, none of this is right or wrong. It's just observations that I've made over time that I think if you really sort of stick to these core concepts, you will be okay. Whether you can grow your business big enough, whether there's a big enough market, might be a different story, Yeah, I think you can get lost in mania and frenzies, and you could argue maybe it's happening a bit now. Like if you look at, I think we're in the 95th percentile in terms of valuations on the S&P 500 at the moment. Never have they been, in general, more elevated for companies. Is this time, maybe it's different. Money's cheaper, rates are lower. I don't know. You can kind of sort of talk yourself into a position. So yeah, just maintain an awareness and test small and then grow big. Yeah, there are some great Aussie examples too, where businesses have really grown large and over time lost their way and ended up falling over. Some of these may ring bells with you or not, but once again, anywhere where there was like not a fundamental profit being made, the business tipped over. Some of them start profitable, get big, lose their way, and get a bit loose and wide of where they should be. So it's really making sure at the end of the day, it's as simple as just watching your revenue and watching your costs and scaling profitably, I think. So, that's sort of summarizing the contribution margin. I think one thing, the CAC example is important. I think if you're dealing in a business, if you're starting a business with a lot of volume and a lot of consumer data, and you need to win a lot of people to make your business viable, you really need to think about that, which we touched on before. We have probably, at Cashies, we get about 40,000 applications a month for personal loans. And so we only approve about 10% of them based on financials. So we could be paying a lot to win customer leads and business and then declining that business. It's not a great model. So you kind of need to just keep a focus on that, I think. And really knowing your fixed and variable costs. What can you throttle back if you have to? What can you do without? How do you recut your cost base to make your runway longer? Do you go and raise more money? There are all these sort of considerations I think that you'll be working through. One thing in terms of scale, I mean, as you grow, it's not always unprofitable. You can start to get bigger and lower cost base as you increase volume and you negotiate better terms with suppliers. And there's a term jaws, that if you can open the jaws where your revenue is growing at a quicker rate than your cost base, you'll probably start dropping a better profit margin. So if you're forecasting that you're loss making initially, but you're going to build scale and grow, and that will then bring your cost base down and deliver you positive unit economics, just keep testing that, because you don't want to go down that path of sort of hoping that something sort of changes and comes off when through your financials you're seeing that that's not going to happen. And then the CAC rising, the cost of acquiring a customer rising quicker than the lifetime value of a customer could be another indicator that you've got your pricing wrong, your costs are too high, you need to make an adjustment. So it's just staying across all of that as you start to build your businesses out. How you fund your business. So depending on what stage you're at, there are some considerations around raising equity, sourcing debt, or other government rebates, or negotiating better supply terms. There are things you can do if you really believe in your business model and you've got some confidence in your forecasting, you're seeing some good early signs, you're testing and learning, you might not be profitable, but the way you structure your business will be really important as you grow and move forward. Equity is great because you haven't really got any overhang or terms that you need to meet in terms of repaying loans or soaking up cash flow to fund debt. But the trade-off with the equity is obviously that you're giving up a share in your business. So if you're going to do that, think about it. How much do you want to give up? You probably want to retain control at an early stage. All of these issues sort of start to come into play. I do think building a profit tree is really interesting with your business. If you kind of follow the life cycle of whatever you're selling or whatever service you're providing, working out where the revenue's going, down your profit tree, your cost base, where you're selling for $1 and then 10 cents is going to sales and marketing and 10 cents is going to manufacturing, and you really start to learn how the revenue flows through your business. It can just make clear to you where there are opportunities to adjust, adapt, or increase price if you've got price inelasticity. If people really want what you've got, or you've got something very unique that's adding a lot of value, don't be afraid to charge a reasonable price for that too. And I do think, whilst we're talking startup, but over time, your plan for sale, exit, acquisitions, your business plan, something that is worth giving some consideration to. The decisions you're making at startup stage will really then start to impact what options you have moving forward as well. There's just a bit of a recap, really, and then just a little pressure test checklist, really, just as you sort of think about it. Just a summary of some of the key concepts here that I would keep coming back and checking. And even if you're going well, it's still worth just being, some scenario planning around what happens if we have another external shock or there's an event that happens, what happens to the business? How does it react under different scenarios and circumstances is really worth being across and prepared for. And that's it. So happy to sort of take a breath, and I've got a list of the businesses that are starting up here, which look really interesting, very varied. Looks like some people have made some really good progress too. So happy to take any questions or have a chat about those.
I have a question on the Quibi slide.
Sorry?
On the Quibi slide. Yeah.
Mm.
So they raised 1.75 billion before they launched, but March 2020 was that pandemic.
Yeah.
And then it launched in April. Like, were they able to push back the launch date, or were they pressured by investors to just put the product out there and then see how it goes?
I think the founders were so convinced that they had the right idea. So this was are you familiar with the business? But it was a short format Hollywood kind of production designed for people on the move. So might have been a good idea at the time, and then the pandemic hit and the world shut down. So people weren't really looking for short format. They were looking for Netflix, which did very well. So I guess in summary, that's the case of a scenario where it was unforeseen, but there certainly wasn't any planning around a pivot or a change, or Cameo probably formed around that time. Different business models, get celebrities to make shout outs. I don't know, how do you repurpose that technology? They kind of went all in. It's not to say, and September 11 was another case. I remember being on the trading floor when that happened, and there was just really no preparation for such a catastrophic event. So maybe a bit unlucky. Raised a lot of money. The model, they certainly didn't pivot. They doubled down and stayed, they sort of were convinced that people would be consuming this material, but at home. They put a lot of money into rendering it on phones where you could go from landscape to portrait, and all the tech around the phone was really well built, but people ended up watching on TV. They want a bigger, experience. So it was probably a bit unlucky, but it's certainly worth thinking about those scenarios. Like at the moment in the market, you might go, what if the S&P or the ASX dropped 30%? What would happen? Could we pay our debt? Could we raise equity if we had to? Hopefully it doesn't happen, but it's just being prepared for any eventuality, really. Yeah. Who's got deja vu? The business. Oh, sorry. No, you go. Yeah. Well, it's a good point. Have you got the research on it, I guess? So, if the plan was such that we knew there was some, scope to increase, and people were prepared to pay $20, but we're charging $9 to build the client base up, and then we'll start lifting like Spotify does now. that's a very valid approach to sort of building a market or winning customers and then starting to reprice. I guess the fact that they never did that and folded, were people willing to pay it? Were the cinemas willing to hold $12? You know, there's a lot to unpack there, really. I do find focus groups are great for dealing with, you know, interviewing your customers and speaking to your customers, particularly when you've got a lot, you learn a lot. And I think the misconceptions about what you think is value and what you think people are using your service or business for and what they're prepared to pay for, you know, there's a lot of value in just getting out and doing a lot of market research and really understanding that. Then you can sort of determine, you know, what you're prepared to pay to win a customer too, because you then have a view on what people might pay and what they might be worth over time. Yeah.
Great presentation. And I noticed there's a lot of software type companies that you have talked about there.
Yeah.
I'm Flowbat, Henry Flowbat. I'm working in the hardware business and we're building a flow battery.
Yep.
Long duration energy storage.
Yep.
And I'm just wondering sort of would the path be a little bit more different? Because for us to progress, we need to secure pilot projects to demonstrate that the hardware, this piece of engineering hardware is worth our customers' money.
Yep.
And with all the innovation that goes into it, and the construction of such and design of such pilot projects are usually bespoke, which means we cannot leverage the economics of scale.
Yep.
And so the pricing for such a project would be incredibly expensive, just as a demo. And then if it works, then we then go towards scaling up and optimize the manufacturing process, and then the per unit cost comes down.
Yep.
So then how do we actually go about talking to potential customers or stakeholders on how do we price these sort of projects? And is it reasonable that we give a sky high price for the initial pilot project? Maybe we have to find government funding to help along with that, because
Yep.
a stakeholder might not be willing to pay that much.
Yep.
And then when it comes to actually scaling up and finding real customers, then we can offer like a lower price, or do we still offer the same price, or is that when we roll out a version 2 that magically becomes cheaper?
Yeah. And so is this residential battery storage or what's the product? Yep.
Suburbs,
Yeah.
remote scale, like huge battery.
Yeah. Is anyone doing that now?
There are. So the current incumbents are the lithium-ion batteries. So think Tesla.
Yeah. Yeah.
Except these lithium-ion batteries are not exactly well suited for like huge long duration scale storage.
Yeah.
Because they just don't scale that well.
Yeah.
With energy. They're too expensive.
Yeah.
So what I'm doing is it's a flow battery.
Yeah.
It can be more economically tailored to such purposes.
Yeah.
I could potentially beat them on cost.
Yeah.
And I know, having talked to some customers, the two things they care about is performance and cost.
Yeah.
So I just need to drive those things down. Really.
Yeah. And so you have a prototype or a pilot that you're running, or is that what you're planning on doing?
That's what I'm planning on
Yeah.
doing. But I have
Yeah. Yeah.
to kind of prove the stability of the chemistry, right?
Yeah.
But I'm currently working towards actually baking in the real innovations
Yeah.
of what I'm doing into the flow battery.
Yeah.
And trying to demo it.
Yeah.
At very small lab scale.
Yeah.
And moving quickly towards a pilot project.
Hey, have you got someone in mind that you would pilot for that project?
I have people that are interested, but
Yeah.
being in hardware, they typically just go, right, we like the idea,
Yeah.
but show me the stuff,
Yeah.
and then come and talk to us again. And
Yeah.
the problem then I'm facing as a hardware developer is I need some money to.
Yeah. It's a
do
different equation, isn't it? It's quite capital intensive to get going.
Yeah,
And then
yeah.
you go the other way and then start manufacturing and bring costs down and everyone piles in and hopefully
Yeah.
happy days.
Yeah, so I'm trying to relate that to the cost model that you were
Yeah.
saying, and just wondering, like, I know like Tesla, for example, when they started, they'd be losing money like
Yeah.
5 years straight. Right?
Yeah. You got to raise a lot of capital for these ideas to get them to production, I guess. And
Yeah.
prove them out. So it is a different sort of trade. And having I guess you could sort of, how you go on pilot and how you partner with someone to do that, it's going to be a key consideration. I'm not sure what a unit would cost or how much you're spending to get a site up and running. It might be big bucks to get that going. But if you see your market as being, you know, sufficiently large and your technology, you know, is superior, you'll get backers to do that, to prove that technology out, to then scale. So A lot of that will come down to you, you know, as a founder and how you're pitching that, I guess. Who you're competing against, how much do you need? Is it 100 mil? Is it 10 mil? Is it 1 mil? Getting like a friendly sort of a customer to help you demonstrate that, or how will you prove that technology? It's probably going to be the key, I guess. Yeah, well, I would sort of go, what's the market opportunity? I'm always thinking from an investor perspective, and it might be different than from an engineering perspective. I think if you've got some technology that you think is superior and it will bring costs down, is the benefit, or is it duration of the battery life? You're not replacing these things every 10 years, it's every 20 years, whatever the benefits are. How big could that market be? And how much of a small percentage of that market would that generate in terms of revenue and profit for you based on your forecasts? So if the market's 100 units and you think you could get 10%, and at 10 units, you're going to make a great return on the capital coming in, people will give you the capital to then go and invent the technology or to deploy the technology and prove it out. The hardware, the manufacturing businesses, they are big CapEx up front, a lot of money in for hopefully then that scale return.
But then it would be projected value, not the value, say, of a pilot project.
Oh yeah, you've got to sell the dream. So you've kind of got to say, you know, the TAMs, you see total addressable market numbers quoted for all sorts of businesses that are outrageous, right? You know, if they'll get $1 from everyone, it'd have $10 billion. But how many of those people how many in Australia would be targets to take your technology on? And if you won a percentage of that, what would that mean in terms of the unit economics? So you could assume if it's costing you $100 to make the first battery, you'll be forecasting that being $50 by the 10th battery, or so, you know, whatever. And then what are they paying now for the alternative? What's the pitch that makes it compelling that people will take that on? So what the blue sky, that outlook of that build out, how are you pitching that to investors? You know, why would I'd give you $100 or $1 million to go and do this if I really believe that you could grow that return on that money? So it could be superior technology, but like the wave technology, if you followed Carnegie, it's been around forever, right? Sounded like a great idea. It might still be, I don't know enough about it, but if we could harness wave energy, and it starts here, I thought, oh, what a great business. But it's been raising capital for years trying to get it going, you know? So I feel like if you're pushing something or forcing something, you know, you might just have to check yourself and go, look, is there a different application? Is it more like a mobile application? There's a billion phones around. Is it better off being smaller scale than it is to power the mine site? Or there are that many mine sites that if I just get, you know, 1% of them running, I'll be away. But it would be a big leap of faith to do that. I think you'd have to raise the capital to say, we'll come and put this in and prove it because it helps us and it'll help you. And someone will go, yeah, go for it. You have to be really committed to it. You have to know what it's going to cost you. You have to know how much money you're going to have to raise. And it's just being real about that. Sorry, I'm not from an engineering background, so I really admire what you do, but it's just different for me from a finance background. Yeah. Yeah. Hi.
You mentioned 10 or total.
Yeah.
How do you confirm those issues? I mean,
yeah.
The range of products we have here.
Yeah.
Assess that.
Yeah. Yeah, it is. And I think being sort of very convinced in that forecast is dangerous. Businesses are probably over optimistic or over calculating TAMs. So yeah, I mean, I think there's the IBIS research reports that are pretty blunt, the external research into markets that you can acquire to help you shape that, but there's no right answer. I mean, I think we're a lending business and we're thinking how many Australians out of 15, 18 million adults don't want to deal with the banks to get finance. It's a really ambiguous hypothesis. And we take in ABS, we'll take in IBIS, and we'll just start to work on surveying our customers and trying to build that. But yeah, I think you're touching on something that's really important. You could kind of build a very rosy outlook and then think there's a huge market. So even if I get a small percentage, I'm away. But how real is it? Yeah, it really depends on the industry, I guess, and how you're analysing that opportunity. Yeah, I don't know. Have you got any different thoughts or experience? Yeah, because I'm always open to different ideas too.
Investing is obviously a big aspect.
Yeah, I think any pitch you hear, you kind of probably discount it by 50% immediately because you know that it's overinflated. because you have a tendency to kind of go, I really want this to go well. So, I'm going to look for all the reasons that this is going to be huge.
Customers that they aren't motivated to actually take the step and connect.
Yeah. Well, and the worst thing is they do, and they have a terrible experience and they'll never come back. So being ready for that and scaling that. I mean, I think Apple do a pretty good job of that now, deploying new software updates or trying to sell. Remember the iTunes store? You had to go onto your laptop and it was so clunky. Then it all goes cloud-based, and then you're kind of willing to pay $1 for a song or whatever. And then that changes to a subscription model. So they kind of created markets by doing that. And I think Apple was so hell-bent on the experience. They spent so much money on making it simple that we don't all have that luxury. But yeah, I think from a finance or an investing perspective, it's really great to find those businesses that have a global market, and Aussie technology companies that are listed are doing that. Life 360 is a great example of that. I don't know if you guys use it, but my wife's put me on it. All our kids are on it. We know where we all are, it naturally just starts to sell itself, I think. So
What was that?
Life 360,
Oh.
it's like Apple or Google Maps, but just way better, way better. So, we'll actually pay for that service to be able to track our kids. It tells you how fast they're driving, if they're braking suddenly, where they are. It's a super Aussie business now based in San Francisco that's listed on the ASX. So yeah, I created a market, beat Apple and Google in my mind. It's a better product, and off they go to the races. It's an incredible story. So their TAM, they argue their TAM is the entire world. Anyone who is anyone with kids and or wants to track a loved one. So it's a pretty compelling pitch. But their market capitalization is going all over the place because people don't know whether it's going to prevail, whether you can charge a fee for it. Yeah, it's just a really interesting story to watch.
Kind of model you're going to have, the model you're actually going to have to generate the revenue. If you have an idea on some of these terms, so Sam's introduced some really exciting terms, CAC, which is customer acquisition cost, LTV, lifetime value. So if you have any ideas on those kind of things, because it's per unit price, and there's no subscription there, right? It's like, okay, what's it going to cost you to get it delivered? What's it going to cost you to market it? What's it going to cost you to deliver it? And then what do you need to sell it for? So I want you to start doing that work now. Well, I'm going to give you 10 minutes, and then in 10 minutes time, everyone's going to stand up. Then you're going to do a 30-second pitch. You're going to do approximation of cost, what you think those costs might be. And then you're going to tell us what you think your revenue stream might be. Dan's going to give you other ideas if he thinks there could be another revenue stream in there. Sound fun?
Just after lunch.
Yeah. How are you going to make money? Yeah. Are you going through?
Deja vu? Oh, okay, cool. Oh, okay. What are you guys representing, are you? Oh, okay. Still beats being in an economics lecture, doesn't it? What are you guys doing? Oh, wow.
Yeah. Okay. I reckon.
Okay.
So the idea is there'll be there's no
Yeah.
So, like, just pull it apart.
Like a chronology of the events or video footage of the events, or
so you would just search
Four pre-made stuff.
oh, cool.
Okay, right.
Yeah.
So you sort of 2012, 2015.
All right. Are you sharing this information with your social network or?
Sort of just like socials. Yeah.
Or is it going to be something that you can sell on site?
So pricing. Yeah, because you would share it, wouldn't you? And say, I guess I'm a Taylor Swift fan and I've been 5 times.
Yeah.
How much is it going to cost?
Yeah.
Okay.
Yeah.
Thank you. Right.
The first part is like we need to have
Pricing model, like how you're selling. Do you know yet?
Well, I think you said it's supposed to be like if you want to do it at like buffets, right?
yeah.
So like how much would it, I guess like how much would it be for like a pre-made drink, and how much do you think that would be? Like say for, so you have like a business like to make it,
Yeah.
yeah.
Okay.
Say there's like 10 drinks, like 10 to 12 drinks.
Eventually we could sell
You're
Right.
selling it for what? Like $4 or $5?
it's like anything custom
Okay. I'll do 6 to 7.
Okay.
Because I feel like if I saw $7 popcorn,
Okay.
I'd be like.
Or marketers or
No, we don't.
So,
It's less market, it's more like somebody's building.
would it be like
Right.
easier to do like a bulk
Right.
and say it's $20,
Okay.
but if you get
Okay.
In order to get
Like-
that, it's
get four of them,
yeah.
not my
Yeah.
drawing, not my best drawing. And so
Yeah.
you get a pack of four premium.
Yeah. Scale it up, and then you've got some value there.
So it's funny, we sort of do have, they are customers of Way.
Like how much would this be
The value that we
for?
get.
They're like selling it to like. have
They're
it-
members, not customers.
Okay.
Yeah, there are businesses like that where the membership, having 100,000 people on your platform is valuable. And you might not be charging them anything, but there are other opportunities to monetize that. So,
Yeah, it's funny, I think.
Or what about 60? Like 15? I know. No, I meant like if it's like this one, if you got, it would be like if you buy it.
not from
well,
them, that's the data. Okay.
We're not ready to sell.
Yeah.
That's
so
what
instead of,
Flybys
like,
do,
these
right? They've
guys
got
just-
everybody on Flybys. And then they analyze what you do with your shopping
So, like-
patterns. So, it's free for you, but they
16
know
for,
everything
like,
about you, which is hugely powerful. Yeah, that's cool. I like the idea.
three-
Cool. I like the music idea too. It's a bit more interesting than some of the other businesses that are garnering.
This would be like, let's say each one.
Hey guys, what are you guys up to? What are you doing?
Still selling it.
I think
67,
it would depend.
Yeah?
on the company with.
Yeah. Like,
Polyarts, polycrafts, and other things, and our production cost is
I
quite low
think.
because
Um,
polymers that we get are from Woodside, BHP, these are polymers that we get, recycled polymers that we
Oh,
get.
cool. Okay.
And
Off take.
yeah, and
Okay.
then we're gonna just process it and make it,
Like-
use that in the 3D
like-
printer to
one time.
print polyarts and
No way.
yeah.
That
That's
sounds
something
cool.
that our major
A monthly,
for the polymers.
you're getting it
The
every month
polymers,
for like half a
is,
day.
we are suggesting it as Airbnbs and as well as granny homes or
Yeah.
you want to
Modular units.
modular units.
Okay.
And but still can't afford the rent
whole
or
thing.
buy a house.
Knowing that.
Yeah. So you're solving a big problem for these miners, right? Are they paying to dispose of this stuff now?
They,
Yeah.
no, they're not paying, if I'm right? I don't
How do they get
know
rid of it? Yeah, I wonder how they get rid of it.
Yeah.
And so it's like a plastic. It'll feel like a plastic.
Trees that
Yeah.
go deep beneath the earth.
Yeah,
They are one-time use.
right.
So after the mines are,
Yeah.
done with mining,
Yeah,
they are complete waste.
yeah.
So there's a company that recycles them.
Okay.
We collect the polyesters from them.
Wow, cool.
Then
Okay.
We can use it as an alternative. So 60 to 70% of what we get back is polyesters, like what we make the houses of.
That's a bit dumb question. So would that be like water bottles made out of this stuff? Same sort of stuff?
Portables, they're like crafts, like furnitures, outdoor furnitures that you can have in the
Okay.
backyard,
Okay, cool.
like for the arts, craft, like some things that you need to have in
This
your
would be
Cool,
head,
man.
concepts.
Yeah.
But major market is going to be
Yeah.
Housing. Okay, yeah.
Housing, because Perth has a housing crisis.
Yeah.
And most of them can't afford a house to buy.
Yeah,
So probably people, young adults can't afford a house for themselves.
yep,
Or even like the concepts of granny homes. It's
Yeah.
gonna cost you like 100K to buy a granny home.
yep.
You could have this for probably half. a
No.
day. I don't know the.
Awesome, man.
I
You haven't costed it out yet.
It is
Okay,
nice. Yeah.
Used to that.
yeah.
But
If the
yeah,
main ingredient is being supplied for free,
yes,
is your
exactly.
theory.
The main ingredient is going to be supplied for.
How do you refine it? How do you make it into,
Yeah,
like, do you have to
so-
melt it down?
Yeah, we have.
Big energy costs?
Yeah. Collaborated with the university tech team.
Okay,
And they do the process to
It's like say some,
convert the raw polyester to
like,
polymer pellets
Yep.
that we use in the 3D.
cool.
you gotta drink.
So you're cutting those guys in with a bit of equity or what? Like just using them as suppliers?
Just using some.
Yeah. Are you
I mean, like,
engineering
even-
background or
No, I'm from.
chemical?
I'm but I'm
Okay.
in financing.
Oh, cool. Yeah,
I'm
cool.
interning for them. Our founders are in Brisbane for an event in Aventus. They are pitching this to get a grant.
Cool.
The
Why
Brisbane-
Brisbane? Is the government more open to that in Brisbane?
There's an Enactus event happening
Oh.
in Brisbane. It's not-
Okay.
It's like an Australian event.
National
So,
thing.
national
Okay.
event. So everybody from Australia is there.
Oh, cool. Love to know more about the unit economics. The costs of it would be interesting.
Yeah, I actually need to know.
I like your site though. It's good to have something visually that you can just go, oh, right, I actually understand
Yeah,
what you're
just
talking
the idea.
about. I heard polymers and thought, shit, that sounds a bit too sciencey for me. Oh, nice. And solving an environmental problem is
Yeah,
going to be
exactly.
a big kicker, right?
My worry is that, sorry, I'm inside this not for this.
Yeah, right.
But about
And then
actually
say look at $7.
yeah, smaller furniture or art.
Yeah.
It's the best time to do that, but I wonder.
So you would make like.
And why art and then housing? How does that come about?
Yeah, so what actually happened is last year they participated in the pitching polygons, and the judges there gave them a very useful feedback.
And then say you did that 4
You
times.
can't directly go into polygons.
Yeah.
Because that's a concept
So
that
for-
is ready to accept.
4.
Right.
So probably do something that's more
Yeah.
beneficial.
So
Yeah.
So one of our founders is actually collaborating with some schools across Perth
Okay.
to supply them furniture.
Yeah.
And polyester furniture.
Okay.
And crafts. And like we came up with poly arts as well.
This one,
So
Is something in the house, and is it a way into talking about?
yeah, exactly.
With the home.
It's just the way that we
Okay.
can get into,
Okay.
you know, making them understand that this can
Yeah.
work for an entire house as well.
Okay.
Because
I
house
think
is going
mine
to be a big
depends on-
investment.
Yeah.
Depends
You have to have some confidence in
Yeah,
that. Okay.
as well as like a light
Yeah.
model as well.
Yeah.
Probably.
I mean, I love the
If
furniture idea.
the-
The art just seemed to be.
Yeah, yeah. I mean, like they are also collaborating with
Not like-
study pods.
Yeah.
Like
Oh, yeah.
UWA to
So,
give study pods,
but
dual
say
study
it was
pods.
like-
Yeah, I like that
Study pods.
idea. Yeah.
So actually, they have presented with UWA and UWA has accepted it.
Okay.
So probably this is going to happen very soon.
Yeah.
And also with IAC Arena,
Yeah.
they are planning to give a restroom.
Yeah.
A restroom setup for
Yeah.
that.
Okay.
As well-
Hotels, cabanas, man, that'd be huge. You know, like.
As well as they are also planning to do, you know, the movable.
Say, like,
houses.
That one.
Yeah.
1550.
The mobile.
and other-
Yeah. What the mobile homes are.
Like
Yeah.
beach.
Or
Yeah.
as well as the mobile restrooms for fancy.
Oh, yeah.
This kind of like-
Because
and
that'll
they
be made like the toilets that
Yeah.
are constant made out of plastic,
Yeah.
new plastic
Yeah,
made.
yeah, exactly.
Yeah.
You could use this for that.
Yeah. Okay.
I mean,
I like
like, the ISC has already accepted our project and they're
I'll
gonna,
say like.
we are planning to do that before November.
Cool.
That's our idea.
I like it.
Supply one.
I like it. It's got all the ingredients to be really interesting. It's just how much you're going to make. What's it going to cost and how much you're going to make and sell.
Yeah.
It's definitely got merit. Hold on.
Wow. The entire. Yeah.
And this one would be like.
That's going to be a busy printer.
Yeah.
Well done, boys. Yeah, let's do it. Yeah. So many cool ideas.
Nice, it's like a new toy for me to play with. So together.
Sure.
Together.
Yeah.
yours.
Some really good ideas out there.
Huh?
Great ideas. I'm just, yeah, amazed. Yeah. Yeah. Super.
So Paul, do you want to go first?
Sure.
All right.
So part of the process for us is we don't really know the cost. That's what we're trying to work out.
Give me a 30-second pitch first.
Profit model, 30-second pitch for the business.
Yeah, so Sam knows what.
So my name is Paul. The business is called Design. We're designing a product called Lex, which is basically a type of digital contract chain that guarantees authenticity and consistent link of negotiating encrypted software versions contract. The main users, it's to deal with massive inefficiency in contract negotiation and processes. It's focused probably mainly on corporates, but also law firms, all of their ones, banks and so on. Anyone that's involved in complex contract negotiation. So we've got the conceptual design to it and some basic architecture. We're guessing it's probably a $250,000 to $500,000 first up enterprise build. And the pricing model we would probably run around it would be, it's a subscription as a service B2B product. We'll probably start at a couple of different tiers, starting with sort of a large professional or medium professional tier for the law firms, then a large business, medium business, small business sort of model, and then different tier $5 per contract for individuals, $60 per month for a small business, $125 per month for a bigger business, and so on. So, all of which to say is, if in year one you can get 60 small businesses and you can get 30 medium businesses, and you can get 10 larger businesses, and you can get 30 small law firms and 10 large law firms, at the end of year one, you might get around $500,000 in revenue.
Right.
It's a SaaS business, so then if you get penetration, you scale.
Yeah. And big, I'm sorry, I just made some notes and not understanding it as intimately as you, but big global players in this space, DocuSign and those guys, or is it different? Yeah. Yeah. Yeah.
sort of bringing in a document management system along with Excel.
Yeah.
Sort of rolls it all into statistically like the trade negotiation.
So not just legal firms, it could be any contract, real estate agents, cashiers will take it on. Yeah. Yeah, okay. Yeah. And then when it's in, the switching costs will be, or the sticky nature of that would be quite high, I'd imagine. Once you're in, you're in. Yeah.
So I thought,
Yeah. Yeah, cool. You got a legal background and network to sell into to start off?
yeah.
Yeah.
So plenty of corporates. So where the teams we're speaking to are large contracting procurement teams.
Yep.
Law firms.
Yep. Yep.
Stuff.
Sorry, it reminds me of a business started in WA that was used for booking talent to do speeches. You could book Adam Gilchrist or someone, but then they realized that the software itself that was enabling that was valuable to the clubs, because you could imagine Freo or Eagles trying to manage talent and engagements and sponsors, and it was all done on a spreadsheet, and they spun the software out to become a SaaS business for clubs to manage players and engagements, and then sold to the NFL, Cricket Australia, AFL. Yeah, so it was cool.
So AI coded.
Yeah.
Yes, hopefully bring that cost down. So that's why the cost thing is number. It's not AI based. In fact, part of the aspect of this that's really important is AI relies on the learning from what's put out basically publicly. None of this material can be public. One thing that's critical here is no one will use it if any of this is going out.
Yeah. Yeah.
So it's got to be able to be stored locally, but yet still encrypted across the whole negotiation chain.
Yeah.
So AI can be part of it, but it's not driving. It's sort of a medium which AI might tap into, but it's sort of underlying file structure itself rather than.
Cool. My final note was lawyers pay well, but they pay slowly. So your sales cycle might be something that takes a while to see. Yeah. Yeah. True. Interesting.
Team wristbands?
So yeah, we're wristband, we're an online archive app for every live music event you need to. The costs are, speaking with Danny, who's the computer engineer, are about $300 to $400 a month, but that's depending on user base. And then insofar as early stage revenue, we are going to run a free and premium model. And one of the differentiators between that might be ads, no ads, would mean that ads would also be a small source of revenue. Late stage, I think once we have this archive of live music, and it's been enriched by, say, user contribution and things like that, we just seek to sell rights to that data, so not customer data, we're not selling any of the users, as an API or something similar to companies that might want to integrate that in an app or website. So we sort of have this early stage revenue, which is we want to try to run as close to zero as possible because we want a big user base to help contribute and enrich this amount of data. And then late stage, we would transition into actually trying to sell that to bigger companies.
Like a membership grab first to then monetize off the back. That's what we're talking about.
Yeah.
Similar to money.
Yeah.
Yeah.
And costs. So that's your cost to build it.
Yep.
Yeah. So like when you start to do that financial forecast, think about like marketing costs.
Yes.
Thinking about like those other unseen costs that you might kind of incur. Think about whether you want to pay yourself a salary in the future. Think about and then what are those in there are variable and what those would be fixed. And then you can start mapping out like in the future. So whilst you might be able to do that, like whatever premium model you charge at now might cover today's costs, but as you scale, how do those costs change? And is that going to be kind of workable in the future?
Yeah, I was just thinking about Spotify. Do they do anything like that? They don't allow you to track your events or anything? They're pumping out now based on your playlist what music's playing locally and live. So it's sort of heading down that path. Maybe, there's a big competitor there that could move on you. What was the term? Janky. Okay. Janky. Not heard that one.
They don't necessarily have a history of the events people went to. So those suggestions and recommendations they're sort of guessing based on what people are currently listening to. Whereas if you had a history of what someone did in their, all the events they went to in their life, you might be better able to predict. At least that's what we're hoping.
Yeah.
And then, sorry. Would you pay to?
Just like track it from my reels or my photos or whatever.
Yeah.
Yeah, but I'm not very sure whether I'd like to pay to keep maybe a memory of them.
Yeah, everyone at a concert's filming it on their phone. I observed that the other day. Maybe there is something where you can have the archive to store your experiences and your concert, and you're not charging your members anyway, so it's not like you'd have to pay. You might then choose to do that to have that all consolidated. I like the name.
Thank you. We'll all get behind it when we came next.
A lot of people trying to build, they might use like anxiety producing or reinforce through guilt or shame. While side kind of uses a different approach, so it relies more on like small micro habits rooted in nature. Thank you. And these might be like taking a mindfulness walk or saying a kind word to a stranger or like bringing up a relative. And basically every time you track a habit into your cocoon, it contributes to the progress of that cocoon and then it hatches into a real butterfly species. And when the hatch, you can see like biodiversity backs up the butterfly and kind of like the conservation status. And then this butterfly goes into a digital personalized butterfly garden. And then it's kind of like you can kind of see your progress visually. And it kind of inspires you to try different habits to unlock different butterflies. In like the validation stage, like we're doing interviews at the moment with a few people, and we're also doing a survey. And then has 60 respondents so far. And for the revenue streams, that's kind of like our biggest open question at the moment. I'm not sure where we're going to go with that, but 73 respondents on the survey said that they would only use a free version of the app. So I kind of want to keep the app like fully functioning from like a free premium perspective, but we're thinking of doing like a subscription model where maybe people are given like advanced analytics or like kind of like AI predictions of like the apps offspring, the habits that they might do like the next day. So if on the weekend you do like more like outdoorsy habits, like going for a walk, you might predict like, oh, like going to do a walk this weekend to help uplift your mindfulness. And also thinking doing conservation here. So like we've already partnered with Moths and Butterflies of Australasia, which is the biggest butterfly conservation group in Oceania. And we're also thinking of doing partnerships with like local like sustainability groups to kind of like as a subscription model, like if you subscribe, you like help fund your butterfly conservation locally. And also like another one-time purchases, like the top 3 appeal driver was in the survey was like having like a beautiful like visual or like nice aesthetic interface. So kind of like one-time purchases in terms of like changing your UI. And yeah, the biggest cost is going to be kind of like 3D modeling of like butterflies or like the art in terms of that.
You love butterflies. Yeah, I guess my mind goes to how do you monetize the offer? Oh, it sounds lovely. I love the idea. I'm sure it'd be beautiful when you got it built. But would you say it's a wellness app and it's nudging you to, or you're building streaks and stuff, or it's against? Okay, yeah, it's okay. Okay. Yeah. I love the sound of it. I just sort of go, how do you monetize it? What, if you get a lot of people paying $1 a month, it might still be worth doing.
Wow. That's what we've got in all the interviews today, like people wanting like a sense of community to keep them like
Motivated. Yeah. And the habit forming something that's very modern and relevant. So doing that in a positive way, I see value in. So I think that would draw you to the app and it keeps you coming back, which is nice. Yeah. Just what would people pay? What would it cost you to build, do you think? Okay. Yeah. How do you 3D map a butterfly? Is it the camera work? Yeah. Okay. Yeah. Wow. Sounds cool. I worry the butterfly's a little bit too specific. Can it be butterflies and flowers and other things? Maybe broaden the appeal a bit. And then as you go, you win more or open more access to different things in your garden. My little one loves that. Yeah. Yeah. Build a whole garden out. Bees are awesome. We've seen the bee movie. Cool. Yeah. Really cool.
There's a lot of these like social enterprise instances where they donate whatever percentage of their profits to like a cause. Like maybe you said, I think you said 75% of people would only be willing to use the free model. Maybe that number would be much lower if they knew that part of that money was yes going towards running the company, but it's also going to some sort of like
conservation
cause.
Yeah, that's a great call.
Because they would see that dollar or whatever they spend every month.
Yeah, I love that idea.
I'm doing it in what help.
Yeah. probably then maybe spend $2 or more. Yeah. It's less of a commercial focus. Yeah.
Like,
I've looked at nudging a lot. Yeah. Yeah.
just because I'm just saying this as someone like, I hate that whole Duolingo, like shaming people. Just
Yeah.
because that doesn't work for me.
Yeah.
I'm just curious, like where did the idea for this come from? Or was it just an idea, just inspiration, like?
Exactly, like
Yeah.
Duolingo, like it's very like negative reinforcement. Like I used to, and it like really stressed me out.
Yeah,
Like
yeah.
I didn't like go back and like keep my streak, and then like it's that Val would like send you like notifications to make you feel bad about yourself.
You guys deal with a lot. The development costs are probably low other than the photography, the 3D model building part. Would that be right? Okay. You could stage that though. You don't have to have everything available day one because not everyone will have access to it day one. Once someone gets a butterfly, you can invest in mapping the bee. Yeah.
Yeah, study, which either was, but
No, give
two
me-
different buttons. So we'll do study grid.
All right.
My name's James Anderson. I'm the study grid. We're an edtech booking platform. We work with private boarding schools at the moment, just in Perth. What we found is that these schools are running programs that they're spending thousands of dollars a week on tutors, and those students are showing up to these sessions and they're pouring time and resources into them. So our platform has been proven to encourage participation in students and also reduce the administrative ease for teachers at the school that are running these programs. At the moment, our costs, we also run a separate platform called Tutor, which is like a private tutoring directory where it's kind of like Uber private tutoring. At the moment, our costs based on our one customer, which is Scotch College, are about $6,000 a year. We outsource a lot of our maintenance to the platform and development costs, so that brings it down quite a bit. And revenue-wise, with the Scotch example, we charge them an initial fee of $5,000 for setup. And we agreed to waive a monthly agreement to introduce us to other schools, which is quite
Right. Well done. Yeah.
But on general, that would probably be around 300 to 500 a month to schools. So that's the main revenue platform. And then for the tutor platform, we take a service fee on top of each booking that's made in the platform.
What are the incremental costs for another school to you? Not much.
Yeah, costs, it's mainly just a hosting platform. So we use the Carmo Cloud. It's about $80 a month.
Yep.
So that will increase every school.
Yep.
Set it up, we get a cybersecurity guide as well, and that's about $400 on setup.
Cool.
So as we grow, it's those two are the ones that are changing.
One off for the setup and ongoing for the hosting, obviously. Okay. Oh, great. Well done. So how did you get into Scotch? How did you? Oh, great. Yeah. Leverage your network. Yeah. Yeah.
And they like to use it to facilitate their sessions.
Super.
So we kind of made a separate platform out of that.
Yeah.
And we just had a chat with MLC the other day, and they're pretty keen to get onto it. So that's looking good.
Well done.
And I was in Singapore speech and some schools up there that I've met at my last job.
Well done.
Yeah.
Geez, that's a great start. Yeah. You've proven out the model.
Yeah.
And the feedback's positive.
Yeah.
Yeah. Hence they're referring you.
Obviously,
Really? Yeah.
but still waiting for money. And so I think the month there was probably like 10, 20 that showed up to it. And just last month, based on the data, there was 170 bookings. So
Right.
I don't know if it's like a mental thing, just like clicking book into a session.
You're committing.
See what's on.
Yeah.
Commits into client students.
Well done. So what, every high school's a target?
Yeah.
Every school's a target? Yeah. Yeah. Is it? Yeah. Right. But you could make that service available publicly to a parent that wanted their kid to go through a program?
Yeah, yeah. So why are they publicly?
Marketplace?
So,
Yep. Awesome. And how they deliver via Zoom or are they physically meeting the kids? Yep. Yep. Well done. Oh, I'm just thinking because my boy's gone through his year 10 exams and he's done terribly. And I'm like, how do I get him some help through the holidays? I think it's more about planning, study and that sort of support. And I didn't know where to go. I was just on Google going,
Yeah.
but
Go on with students, you can search whatever.
awesome.
And you can
Well done. Who built the tech?
I work with the team of developers that are based at Bhutan. And I used to work with one of them at the IGA. When I was
I love it.
studying software development. So I reached out to him with the idea and he was pretty keen to have
Well done.
these
Yeah, awesome. Yeah, it's probably pretty good value. Yeah, I mean, how do you bill? How do you collect payment? What are the terms?
Following up on that and just getting it done.
Yeah. And then public marketplace?
That's a big tech service fee. So whenever you book through the platform, whether it's through Apple Pay or use your card. So
Yep.
it's a $60 an hour tutor will add $2.99 to the fee.
Yep.
And you pay
days.
How do you find the tutors? Are you just advertising for them to jump on your platform? Yeah, freelance sort of.
They will have like a directory that they use. And they'll say, we're going to start recommending this platform. And
Yeah.
it's coming in asking for tutors. You guys like to sign up.
Yeah. Are you doing any quality control on the tutors? Like the rating system?
Check working tutor.
Yeah. Yeah. Yeah.
Until they've been verified.
Okay. Yeah.
Percent delivered, same as with the schools, if they're, especially if they're slow payers, payment upfront, like, you know, what, 14-day term.
Yeah.
Got that in there, just keep slow.
Yes, it's like the initial fee will say half of it up front and then half of it once it's built.
Right.
And set up. But so with the private ones, it's very much money will be held on our platform, and then after the session's been complete, the Monday after, we'll pay out to the shooter. So if like shooter then show up, the session's cancelled, we are able to give a refund.
They're contractors, are they? Not paying super and all of those obligations that you got? Okay. Yeah. Well done. Sounds super.
To tackle the money, like the thousands of dollars spent on braces treatment that goes down the drain when people don't wear their retainers. It's basically a like one-time purchase thing. So far, including everything like samples and stuff, it comes out at like $13 per thing. And like I'm hoping that after these one-time purchases that I've done, the cost is at $11 per kit. But counting everything like marketing, customer acquisition stuff, maybe like max $50 per day. So hopefully that's like a good margin.
Sorry, you're selling for what? 15 and 59 and cost?
So right now, 13.
Okay.
That's just it.
Yep. Yep. And you're manufacturing where? Where are they made? China? Yeah. And it's a one-off sale, is it? Yeah. Okay. Yeah.
It's not intrusive, but like useful. And I want to encourage that.
Yeah, cool. Do a lot of people wear retainers?
Yes.
Your market, how big's your market in Australia? So teenagers, I guess it opens itself to many other applications too, beyond retainers. That's really nicely made. Yeah, it's cool. Footy club colours? Right. Mouth guards are in plastic. My boys have got terrible plastic, the covers that they found somewhere. Their mouth guards are coloured, their club colours. You make that the same, it could be pretty cool. Yeah, I know. Yeah, to protect something that is a lot to buy, it makes sense. So you'd have a market. That's cool. Well done. How many have you sold? Okay. Yeah. You're ready to go.
Know what he's gonna say? We're gonna launch this week. We're gonna get some kind of socials out. We're gonna get some photos done.
You got a website ready? Okay. It only takes a day now. Just write it on.
Ironflow. Should we go to Ironflow before I'm there and start providing you?
So my name is Taz. I'm the co-founder of Ironflow Solutions. And so mining service contractors are losing millions of dollars a year due to fragmenting. So jobs are being delayed, client relationships are being lost, and money is being left on the table, essentially. So our B2B SaaS product aims to solve this problem and ensure that doesn't happen again through AI-driven insights eventually. We currently have 2 clients that we're working with as consultants. And we eventually aim to start and hopefully convert our existing consulting clients onto that subscription model. So we've done some rough estimation in terms of our CAC, so customer acquisition costs. So essentially we've included things such as referral commissions, LinkedIn SEO, meetings and coffees, because with our industry, it's all about networking essentially, and we have to go to these events and maybe potentially as well as our current consultancy costs. So our time being booked is, so how much do we earn an hour and a month, and we figure out how much we actually do this. So that comes up to roughly $5,000 a month. And so I'll let Roshan kind of go through, I guess, the rest.
And yeah, so just looking at like our lifetime value, so we've noticed that with our customer base, usually once they get on the SaaS product, they're running for maybe over a year to even 2 years. So it's quite a long lifetime value. So roughly we're looking at having a cost of $1,200 per customer. That's per month, so the SaaS basis. So looking at that, comparing our customer lifetime value is $28,000. So looking at our cost versus that, the ratio is about it's pretty like best case scenario is 18-1. Worst case scenario is like 10-1. So that's kind of where we're at with it at the moment. Yeah, it's about 6,000 to 8,000 services within the industry itself.
Yeah. Well done. That's a great start. I guess like scaling, I think you touched on it. How do you scale this? Does it need someone selling it into a? Yeah.
That's how I see us saving.
And what about selling though? Because yeah. Could you franchise or could you, are there other ways you can empower people in New South Wales and Queensland and SA to sort of get, yeah.
Construction companies. So, you know, sometimes it's not great going in and be kind of a bulldozer and come and say this is the.
Yeah.
I think in a sense, it would be like.
I started a little drone inspection business with a mate that was a pilot, so he was CASA certified to fly. There's maybe 4 or 5 of us, and we ultimately won some pretty big projects mapping the Coolgardie water pipeline for the Water Corp. I think it was like a $75,000 project. It cost us about 95 in the end. We had tyres blowing out on trucks as we're chasing the drones and all this sort of drama with scaling. And what we ended up doing was sort of partnering with different, and you were touching on it, partnering with different sort of adjacent operators, so cranes or heavy earth moving, and offering a drone service, and ended up getting a partner in Malaysia and starting to build like that, where we were required originally, because technically it was really hands-on. Over time, we built the partnerships that enabled us to sort of put our IP into those businesses and then train them up and have them selling. So it's congratulations on getting 2 in though, because you've proven that the tech's working and that the offer is valuable to the client. So you've got something. How you distribute it now and how you grow it's probably the consideration. Sorry, say again. Your IP. So your tech is not, you can't protect that. It's not unique. So it's a booking system that you've built. So you've built something that. Have you built it or it's just off the shelf? Oh, right. So it's probably more a service than it is a product, is it? Yeah. Yeah. Well, if you're building it off platform, it wouldn't be. You would own that. But if you're building it within the Microsoft sort of ecosystem, it'll be hard to protect that, I think. Yeah. And I think anything on their time, and if they're paying you for consulting, technically they'll own the IP. Because they're engaging you. So if you do something completely separate and build your own, you get a Python coder or whatever, one of these smart guys to build you something, it'll be unique and different. Yeah. I mean, you could build a consultancy doing that for businesses where you're employing people to go out and do that. It's a bit different. Protecting that IP though will be difficult within that Microsoft ecosystem. Yeah. Cool. Yeah. What are you studying, or what did you study? Yep. Oh, you're going to be valuable. Cool. Yeah. And to commercialize something too, even if it's within the Microsoft ecosystem, is a great achievement. Yeah. Oh, cool. Oh, excellent. We won't hold it against you. Who let you in? Yeah. G'day.
So we are Ocean Planet. Currently right now in the diving and snorkeling industry. When ocean hobbyists, they want to go diving and explore new environments. Sometimes that process of finding the information, what they're going to see there, and taking away further educational content. It's information's out there, but it's very fragmented, and this can be time consuming, a bit of entry to a barrier to entry, should I say, for actually further engagement in the ocean and learning. So we're trying to create a web app that essentially puts everything into one place with a big focus on the education side. So our ideal customer target is a diver or a snorkeler that goes diving or snorkeling to experience marine life and then to educate themselves. So they want to expand their knowledge about the ocean. So at the moment we have a working MVP, and we haven't figured out exactly payment structure or revenue structure, but we're thinking about doing a subscription base with maybe roughly around, we've looked at a few competitors, they're charging around $6. So we think maybe $6
per month. Yeah. Sorry. Yeah.
So it'd be a freemium. We want a lot of the information to be free because I think that's our end goal, is the vision is to educate people about the ocean. But yeah, we know we want to build a sustainable business model, and so we're thinking about, that would be a good start for people to pay, and then we want to give 25% of that subscription per month to a local NGO. So yeah, trying to meet with someone on Friday to organise that and see if they'd be interested, and they're in the same area of citizen science as well. They're called Reef Life Survey, and they're all about documenting where species are and ocean education. I guess they're probably more science focused.
Yeah.
I think we're science communication focused. And so one of the parts of our app is also mini lessons. So we're thinking about if they don't want to pay for maybe the subscription model, we could offer like 50 cents per lesson if there's a topic that they really want to learn about, 50 cents per lesson or $3 per course. So
Okay.
depending how many lessons are in that actual course.
Yeah.
But yeah, and in terms of like how much it's costing us at the moment, well, yeah. Ryan, do you want to speak about it? But yeah, at the moment it's not, because we don't have too many users at the moment. But we were just speaking before when we did that activity. I think running a software leanly is quite possible.
Yeah.
I think it becomes harder when you build that user base up, but I think we just looked at maybe if we had roughly around 1,000 users, it would cost us $20 a month to web hosting,
Right.
the database, like people uploading photos into that and everything. So I think that's the lean side. I think the issue that we're going to have with scaling is customer acquisition and potentially once we want to prove the idea in Perth and then scale around Australia.
Yeah.
Ideally, once overseas, getting access to that information, connecting with the right people. It's quite surprised at how open people are being to give us free stuff. Like
Yeah.
a lot of the species photos, which is something that might be an ongoing cost. I've got them all free at this stage, and but yeah, we want to engage the community and like make this a community app, and like
Yeah.
we want them to see the vision that we're creating, I guess.
Paddy would be the guys to get in touch with, wouldn't they?
Yeah, they definitely.
Yeah.
They could really jump in and kind of steal because they have their somewhat of an own version of this.
Okay.
But it's very generic.
Right.
We're going for that like local knowledge. You're generally going to learn something about this. Like,
Am I taking photos underwater as a user and loading them up?
yeah, you can. Yeah.
Okay.
You can review dive sites. You can check out dive maps.
Yeah.
You can favorite some of your favorite species.
Yeah.
All the species page have like more information on it essentially rather than just the name.
Yeah.
So like a lot of what the apps are offering now is just like they might say, oh, you might see a turtle there, but it stops there.
Right.
So we want to integrate that learning process.
Oh, cool.
How many encourage?
There'd be a lot of people diving, I would imagine.
Yeah. I knew the numbers a while ago. I couldn't tell you at the top of my head, but worldwide there's lots of hobby divers.
Yeah.
And yeah. I don't know the numbers.
70, so $6 a month. Yeah, you're just going to need a lot of people on board to make that a
Yeah.
business that could sustain 4 or 5 of you, I
Yeah,
guess.
so I think it's once there's a user base and
Yeah.
it can be very sustainable.
Yeah.
Because it's low data costs, I guess.
Yeah. Yeah.
But getting the access to all that information, it's more it's like a time consuming process, and then the marketing side.
Yeah.
Figure out how much we're spending on to
Winning users or winning members or customers.
that's
Yeah.
like-
Customer acquisition. Yeah. Interesting concept. Yeah. Obviously a love for the ocean. You're a marine scientist or something?
Yeah. So we're both studying Master of Ocean Leadership.
Yeah.
We met so that and Ryan's studying marine science.
Yep.
Yeah. He was actually one of my students.
Oh, cool.
He was showed a lot of enthusiasm, and then he told me he was a developer. I was like,
Is someone in the team building the tech or have you outsourced that?
yeah,
Oh,
Ryan.
yeah. Okay, cool. That's a good way to keep costs low, but it's also a good way to develop more features and build out.
He's also in marine science.
Yeah. So is this a passion project or is it hopefully it grows into something bigger than that or? Yeah.
We started with the idea a year ago, and like just had really good support from
Yeah.
the ocean community, and I think the science communication aspect of like,
Yeah.
we want more people to understand the local environments. And
Yeah. Yeah.
So yeah, it's definitely a passion project. I love learning. I'm learning so much myself
Yeah.
about the ocean, but also the business process as well. But yeah, it definitely would be a dream of mine to actually work with mine.
Yeah,
And,
cool.
yeah, and then expand into other things, not just the app, but have certain maybe restoration programs and building that network.
And above the water, is there some value in that sort of like, I don't know, like trail walking and categorizing, or is it just an underwater thing that you're going to focus on?
Interesting enough, I did a pitch at a science conference, and someone did bring that up. They spoke about beach combing.
Yeah.
So yeah, it's definitely like
Something that could
an
grow.
avenue to look through, like
Yeah.
people who just
Think about growing your
understand, like,
markets. Still love the ocean, but don't dive.
Yeah.
Yeah.
Exactly.
Yeah.
At this stage, with everything we're already trying to do, yeah, it's too much, but it's definitely something if we have.
Have you got something built, MVP?
Yes.
Okay, well done. Sorry. It's interesting.
The absolute key for you. And then when you're looking at those, like giving back, there's like heaps of groups that are like 1% for the ocean, 1% for the planet, and they're basically like a formulation of like heaps of companies who think like you, but it's also a huge marketing network. So have a look at some of those in terms of like legitimizing, is that the right word?
Correct.
Like you're giving back, because that could be really good on that twofold thing, and ask people what they'd be willing to pay for it. Like if you said to me, we want to run something for you and your kids on, you know, underwater exploration or a species of fish, I'd be like, oh, lapping that up, and I'd be paying like, you know, we pay like $120 for those kind of things. Like, so don't
Undersell it.
discount those.
Yeah.
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 $3. I'm like, I'm going to have like 28 for that one.
Yeah.
More. Okay, Michael, should we go to you?
Sure, I don't need that microphone. Michael, that's me. I'm the founder of Takedown Sports Nutrition. Pre-workouts suck. They're way too highly caffeinated. They don't have the sugar that you need.
Yeah.
Sorry.
He's sporty.
I'll try one. I'll try one.
So they suck. Pre-workouts suck. They've got way too much caffeine. That leaves a lot of users feeling jittery and anxious. They also don't have sugar or electrolytes, both of which are very important to optimal performance. Probably the biggest issue I find, and many others find, is that it leaves a horrendous feeling in your stomach. So if you're doing anything other than posing in front of the mirror, getting a nice bicep pump, you're going to feel like shit. Excuse the French. Until now, we're developing, or I have developed, a non-caffeinated pre-workout jelly. It's got what you need. It's got the electrolyte. It's got the sugar, just without the caffeine. So you can take it any time of the day and it sits well in the stomach. So when I go do my wrestling, or you go do your running, whatever it is you need to do, you're going to feel okay.
How are you making that?
Right now, just at home.
Yeah. Okay.
It's going to need to be manufactured by
Yep.
Metro
Yep. Yep.
commercially.
Yep.
So costs and revenue streams.
Yeah. So we've got a quote from the manufacturer. Minimum order quantity is 15,000, and
Single shot.
yeah,
Yep.
yeah. It's 150 ml pouch. How's your catching skills?
I'll give it a go.
Yeah. Play cricket. That's
We could keep it, mate. Oh, very nice.
That's not what the packaging would
Yeah.
be.
Right?
Sorry.
That'd be the quantity.
Yeah, potentially. I'm actually, just after you asked us about price per unit and stuff, I thought, shit, we're going to potentially have to ship a lot of this. I could look into minimizing it to 100 mils, but I think part of the value is that you're getting 100 mil of juice in you as well, not just.
Yeah, the incremental cost for doing some more wouldn't be high anyway. It feels like a bit more value if it's a bit bigger.
So sorry, the real key here is, with everything included, shipping coming to me, $2.
A pack.
Under $2.
Yep.
Each.
And what are you selling them for?
Selling would be, at the moment, I'm just selling them $4 each to just friends within the community.
So
I run a
marketing.
wrestling club here. I coach. I know everybody in the wrestling community, and because wrestling's a highly valued skill within combat sports, I then know a lot of people within that community as well. That would be the initial segment.
Cool. So like your total cost, marketing, distribution, the other costs that'll go on, you'll sell for more than. Yeah. Yeah. I'm using Macro Mike. Have you heard of Macro Mike? Another clean sort of manufacturer.
Yeah.
Yeah, sells for a lot more than $4, I think, by the way.
Look, probably once it goes to market, you go to get something similar to that at a servo, it's going to be $5, $6.
Yeah.
So $5 probably.
Are other manufacturers making this?
No.
Same way? So it's
There
unique.
is one product out there that uses the same kind of delivery. They don't have a specific pre-workout. They've got what they call Endure, and then they've got Focus. The Focus is just caffeine and nothing else.
Right.
The Endure is literally just jelly and maltodextrin or dextrose, one of the quick-acting carbs.
Right.
But it's got no performance amino acids, so it's not going to give you a pump for your biceps. It's not going to help you work harder with the beta alanine. It's got no sodium, no potassium, and they're things that you need to perform better.
Yeah. Oh,
Stuff.
I can see you on Shark Tank. No, you're a good salesman.
Thank you. Try it, and
Thank you.
Just going to sell it.
I'll let you know how I go tomorrow when I'm doing the weights. Well done. Thank you.
Chair, co-founder of Architect IQ, not to be confused with building architecture at all. We're dealing with IT solution architectures. Think of a big project. So we have a manual solution architect setting and drawing it up. Right. So we're trying to automate it using multi-agent system. Just so it brings down 5 days worth of work down 15 minutes. Given that you put all of your business requirements, whatever you get out of a handover document into the tool, that's what we're doing. So at the moment, our fixed costs are like, it's primarily API costing because we use an OpenAI and maybe we'll be using Anthropic's APIs. So we had about 3 early testers, in part of IT companies itself. We had about $20 spent kind of exhausted like 1 hour's worth of usage. So we have to figure that part out.
So AI built, open AI built,
Yeah, the API is from OpenAI.
right? So your IP is your IP. Can you protect the IP? Don't know. Yeah. I'm just, yeah.
At the moment, it's a wrapper, but as we continue building it more intelligent, we're going to have different AI agents, and it's not going to be just based on the wrapper, but ultimately we're going to call an API.
Yeah, sure. Okay. And selling, what subscription model is it?
So it's probably based per seat per usage, and you want more usage, we're gonna price you higher.
Okay.
Last year, they did a subscription model, so like to capture market share, like, buy, I think, like 12 months up front, and then they've done usage billing as well, which is obviously a cost.
Yeah, there's also the variable costing. We give them a base plan, and an add-on would be how much would you be willing to use it for, and at the end of the month.
And ultimately the benefit for them is saving headcount or?
Yeah, saving headcount.
Yeah. They might pay for that upfront installation as a result then if there's some real value in that for them.
Yeah, I'm not into it.
No, that's cool. Yeah, okay. Well done. Right. Your deja vu. Yeah, because secondhand sales, right? Yeah.
So what we're doing is getting people's clothes for them and selling it for them on an online curated space. The cost that we would have would primarily just be the Shopify storefront, which is about $55 a month. And then on top of that, the labor cost of actually sorting through the clothes and then uploading them online. We would be getting revenue through, I guess it's almost like a membership system. So they're paid to get a box, fill up their clothes and then ship it back to us, and then we upload it. And then a consignment fee. So we'll take about 20% commission on the sales. And then some other costs would be packaging and then delivery, but ideally, like we would get the customers when they buy something online, shipping, they'll pay. So yeah.
If you make the app easy enough for the customer to load it, would that be an option? You don't have to then incur that labor cost. People don't want to do that. Okay.
It's a bit messy, and the whole idea is to make it look aesthetically pleasing, not kind of clothing chucked on the floor.
Is that like, is Vinted, are you familiar with Vinted?
Yeah.
So that's the model that you're talking about where people are having to load themselves and they're getting hassled and whatever.
Yeah.
And so you're doing something a bit different. Okay. And then back to your revenue and your margin. What do you think? That sounds quite intensive if you've got someone sorting through the clothing and loading it and selling it. And secondhand, not huge margins. Have you had a look at that and what you think you could make out of doing that?
And then, yeah, I guess the main thing is trying to see if we can automate the labor kind of intensive processes. So then the cost per upload would be significantly lower.
And the user's paying to post back the box of clothes, or how's that working?
Yeah.
Okay. So there's going to be some costs involved in that freight element. Well done. I like the idea. Solving our landfill thing is a big part of it too. Yeah. G'day.
I'm an architect, and during my career I've been experienced the frustration of constantly having to go to collate information on individual buildings by going to a number of different sites if I want to find out who constructed the building, what its current zoning is, whether it's a flood zone or heritage restrictions, etc. If you wish to know about the backgrounds and interest of the person, you can refer to either LinkedIn or Facebook, both of which provide a standard digital framework for recording key aspects of individuals. I therefore wish to develop a standard digital framework for individual buildings so that I can gain all that information in one site. Marcus Mann suggested I call it Facebook, but I don't yet have a marketable name, but in terms of costings, I obviously need to set up the website and look at opportunities to scrape that information from the various sources and put it into there, and then investigating whether that can be then sold on a subscription service or do that. I have a number of users. I've got to find the customers. But basically, one option may even be to put it into a format where Google Maps or something would be interested in. You click on the building and then you get this additional information.
Yeah.
Or some non-profit entity like the National Trust Institute of Architects may be interested in taking that on as well.
Oh, I like the idea. I was sort of thinking about commercially, how applicable would it be to a mass market? This is quite niche, I guess. I was sort of thinking of Wiki, where you go on and you have a look at all this information and it's free and they're loss making. So I was going, how do we make sure that we're generating a reasonable return on the idea and the effort going into logging the buildings?
Yeah.
Right. Okay, yeah. Be careful with the local government too in terms of their payment terms and their payment velocity and all the rest of it. I've had some shockers there. And it just like incremental cost is low, I'm guessing, once you're built. Yeah. Interesting. Okay, well done.
So what we do is I'll show you guys a growing as for information of that program. They were slots and forwards, significant stuff in those that we got South African stores. The problem is those slots that they've got unreliable systems of imported goods. So when they import goods, if something goes run out, they'll have to tell you that, or we'll call you if there's if the stock comes up, or you'll have to give even months to get those stocks. What we're trying to be is a reliable supplier for those stores. Currently, because we've got roughly about 18 grocery stores, that's just grocery stores alone. Excluding other than the African restaurants and other instituted cultures and stuff. So we plan to make we're trying to be a trusted and reliable source of acquiring those goods because of the non-reliability of the market prices of same prices. We need to get students and store that into the products in the country. So that's where we come in place. So we've got roughly 2.67 population of people. Just within Perth alone. And yeah, that is probably growing in those the people we try and cater for. In terms of our cost, we've got part of our website, which is probably $15 a month. And then we've got actually sourcing the goods. We've talked to a few suppliers, a few stores immediately, asking questions about like the products that we're missing a lot. Because by getting that, we will have to also to get all this stuff and then have it much more easier for all these companies to get products. We're trying to set up a partnership for store within the next 6 months. So one of the challenges is also like just in general communicating. Currently, we communicate with face to face because some of these stores are owned and run by. So if you go into stores, sometimes you can just see where, but this I just have a conversation with them around some of these things. But then it also limits our scalability. We can't really reach space, and if it's almost generic, we have to be like in person because it's most hard to reach. So that's where our challenge lies right now. And
so yeah, you're actually importing in this model. You'll import and store in a warehouse. Oh, right. Okay. Yeah. You'll have a fair bit of capital tied up in that to have a reasonable range, so everything's available on call.
Yeah.
You'll have a fair bit of inventory, I guess, that you're storing. Yeah.
But eventually, we're also trying to integrate like an AI system where we can optimize the amount of stock we carry, so that we don't overstock or understock.
Yeah.
Our business model, I feel, is very volume dependent.
Yeah.
It's based on volume. We're still at a stage where there are sort of two options we're looking towards. One is making a subscription base, whereby what we charge is the service of having it ready-made every time, and them being able to get it faster. Because also stores, regular stores now like Woolies and stuff like that also have their own international sections, which is now competing with them. So we're trying to make it easier for them to be able to make these products cheaper, so people know them as a supplier. Because a lot of people still don't go to them because they whenever they think of the sort, they think of expensive. So they've got like long distance and time between when they visit stores. So they may visit maybe once every 2 months or once a month, which is a problem for them themselves.
You just have to consider probably focusing on a few product lines. You're going to have to store that inventory so it's available, ties up your capital, some of those considerations. And then your margin on the other end, selling that stuff, you're saying it's quite expensive in the shops, probably for a reason. Freight, storage, distribution, and marketing. So you just have to think that through. But it sounds quite niche too. Yep, cool. I'd just say try it on a small scale. Just try a few lines, bring some stuff in, see if you can sell it, see what margin you make.
Like invoicing terms, so you're not holding heaps of stock and then not getting paid for that stock until like that's sold, for example, in the store. So payment up front for that.
Well done. Great. Well done. We have.
I told you about the costs involved in polymers. I mean, we essentially recycle the polymers from BHP wood side, so the costs involved in getting the sources less and converting them from raw polymer into polymer pellets so that we can use for the 3D is also less. Cost wise, I don't know what the exact figures are, but I can say that that's very minimal compared to what the cost involved is in making a traditional house. And in the revenue perspective, we think we can sell polyhome less than half the price of what a granny home sells or what an Airbnb unit sells for. Is there any advice that I could give?
Oh no, I think it's a great idea. I love what the guys are doing. I think just don't be scared to make sure that you put in a fair amount of safety in the margin if you're selling one of those homes for the first time. You're fitting out the RAC arena with some artwork using your 3D printers. Don't be scared to charge appropriately. For them to do that commercially is going to cost a lot. Just don't limit yourself. And then how do you protect yourself against any movements in cost base on those modular homes? Is it cost plus model? Is it a fixed price that's got a heap of contingency and margin in it? But you're going to have to, the first one, I'm not sure what unit sale price it would be for one of those homes. We were saying we haven't really gotten there yet. So, it's probably, if a granny flat's 500,000 and that's 250,000, don't be, that's a big difference. So don't be scared, price the margin in and go for it. I like the idea of solving the environmental problem though, to create the plastic to build the homes. I think that's really cool. Well done.
Yeah. Very quickly.
So I think as you guys know, I'm the founder of FlowBat. We are building a zinc ion flow battery for long duration stationary energy storage. And I just want to add, so what that means is duration of storage significantly longer than 6 hours. And the use case of such technology will be to supplement peak hour electricity usage. And the current state of the art of things is that companies like Western Power, Horizon Power, or even Woodside, etc., the energy generators and transmitters would turn on their gas peaker plants, or even diesel generators during these peak hours. So when you get home at 6 p.m., everyone goes home, turns on the electricity, play some music, turns up the aircon, something like that, and the demand goes up for the grid, right? And these companies will turn up the gas peaker plants, and these plants are very expensive because you turn them on and off, right? You cycle them on. And this is where a battery will come in. So instead of turning these expensive things on and off, you would just use the battery. It's kind of like a plug and play into the grid, right? And the problem here is that your traditional batteries, like lithium-ion batteries, are not really well suited for such cases. They're very good in electric cars where you have lots of power requirements, but in these cases, you want longer discharge duration, and these are very expensive lithium-ion batteries. And a flow battery, you can very well tailor it specifically to this. And the
cost-effective, right?
Yes. And the one last thing that I want to add here is actually for us, the main, I guess, the creme de la creme for us is actually the electrochemical reaction chamber, not so much the battery. And this is significant because we have completely reimagined what a electrochemistry reaction department looks like. And in this way, we're able to manufacture it in a more cost-effective way, and that means we can use it for any other flow battery type. We don't have to just sell our battery, we can sell it to other flow battery manufacturers. In fact, we can also reverse it and sell it to petrochemical or electrochemical processing facilities using the exact same thing, right? And this ties into the cost revenue, where for us, the only thing that we consider is we are concerned with is how many of these reaction chambers we need to manufacture. And to that end, we have a workshop in Sweden, so all of these will be manufactured in Sweden. And through some workarounds, we worked out that a year we can roughly get around 4,400 cells manufactured. And if we link this into 20% of Australia's SAM in this sort of market, then that's roughly $460 million. And this 4,400 cells is less than, like, it's roughly 1% of that, right? And that's not even maxing out the workshop. So in this way, there's a lot of room to expand over there. And if we truly scale up to what the workshop can handle, which is roughly around 22,000 cells a year, then the cost, so with 4,400, we're looking at 586 Australian dollars per kilowatt hour manufactured. If we scale up to that 22,000, then you're looking at around 300 Australian dollars per kilowatt hour. And to give it an idea, current lithium-ion batteries are sitting around 650.
So this will knock them out if it's proven and reliable. Yeah. Yep. Okay.
So right now we're in the prototyping stage. We need to validate and prove to investors and to stakeholders that technology is working. And fingers crossed that happens at the end of the year.
Now, what on setting up the manufacturing arrangement or having that on call? Have you followed CATL in China, CATL? So there's some big guys looking at this flow technology, as I understand. I only look at it from a perspective of is lithium doomed in the long term from a pricing perspective. So yeah, interesting technology, and I think it really is going to be the way of the future. How you get into that arms race with some big manufacturers that are out there. How many, like for a standard mine site, what's it going to cost you to set up a battery operation that would power them?
So if we're just taking
Roughly.
peak shape, right, then it's roughly around $100 million.
Oh, right.
That's because these guys need like absolutely fat batteries.
Yeah, that's a big investment. That's a BHP or a Rio then or something. Yeah. Okay. Can you go more modular? Can you go smaller to prove it?
So that's what makes
Yeah.
is that when you normally manufacture a battery, you kind of put all the cells together and you ship like a couple hundred tons across the ocean, right?
Yeah.
But for us, all we really have in this reaction chamber is plastic. It's really light, easy to manufacture, and it's completely customer specification irrelevant. All we're doing is we're repeatedly manufacturing the smaller cells over and over and over and over again, and you assemble it on site. So if a customer wants 10,000 cells, we manufacture the same little cells over and over again, 10,000 times, give it to them. They do what they want with it. And if another customer wants 500,000 cells, same cells over and over and over again.
So starting in a small way, isn't it? Improving the technology and.
Yeah, so it's highly modular, and it doesn't matter if a customer comes to us asking for, I don't know, $100 million battery or a $10,000 battery, it's the same.
I think it'd be cool if these things lasted longer than the Tesla batteries too, because in 10 years when you're throwing those things, right, make them for a car. Make them smaller for the cars.
Unfortunately, that won't be the use case for up to a roadster because they're care about weight and the batteries they can't catch on fire. Right?
Yeah, you got to work out a way to start small and prove it out, and then scale up. Well done. Yeah.
That works. That's awesome. Start thinking about this when you start grinding. And can we give a huge round of applause, please?
Some great ideas out there. It's the last. I was saying to close the last day of the financial year, so my phone's lighting up with all these queries flying around about what our numbers are going to look like for the full year. So I love, it's inspiring hearing what you're doing, and I think just stick with it, test small and fail fast, like they say. And that way you don't risk the farm when you're going. But I think there's some super ideas, and congratulations. Yeah. And well done, Chloe. Yeah. Oh, you shouldn't have done that. Oh, that's very kind of you. Thank you. It was Atomic Habits last time. Thanks for having me. Thank you.
Get back.
Yeah.
So, yeah. So good.
Oh, yeah. Hopefully the presentation stuff gets us some thought, and I just.
That was great. And also, I haven't heard from us yet, but next week they're going to. So it was a great way to introduce.
So,
Do you want me? Oh, Dad, go.
Yeah, that was okay. Yeah.
I mean, go.
Oh, yeah. Okay.
Thank you.
Wait,